So Federico, thank you very much for joining me today. How are you doing?
It's great. You may hear the cicadas in the background. Every 17 years, we have cicadas in Washington, D.C. It's quite an event.
That's so lovely. You can hear birds chirping outside my window 24/7. I don't hear it anymore, but you know, some people might notice. So I wanted to talk to you about the disappearance of LIBOR at the end of 2021. How promising are the replacement reference rates?
In many ways, very promising. And I just want to take you back to the pre-global financial crisis world, where the money market, which underpinned the LIBOR, was unsecured lending between the major banks, the major corporates worldwide. It was very liquid, and these institutions trusted each other's name. And that's how LIBOR was born. Now, what happens to the run-up of a financial crisis and afterwards? The money markets went from primarily unsecured to secured. And this is what SOFR means. This secured overnight is the key point when you talk about SOFR. And that's where all of the liquidity is. All of the liquidity is in the secured overnight. That's how the money market evolved. And the SOFR that is published is the expression of this now incredibly liquid overnight market, which is very well accepted and is where transactions take place. So I must say the rates, particularly for the US dollars, are very promising. And outside the US, my understanding is that things are even smoother.
And of course, we've still got 6 months to go. What do you see as the biggest hurdles now and in the next 6 months?
I think there is an unresolved question for financial institutions in the market. And it is that a secured overnight rate does not reflect the cost of funding for financial institutions over the medium term. So you have a bit of a dilemma if you are the treasurer of a bank, because markets are going to charge you a credit risk on your funding. And then on your lending side, if you switch to a secured benchmark, you're not going to be able to reflect that variability, that funding uncertainty. You're not going to be able to transfer it out on your loan portfolio with your clients. This creates a mismatch for your asset liability management, which I think is still very much unresolved. And that is really where the action is at the moment, with the market trying to figure out credit risky benchmarks that can be overlaid to this very rich secured overnight to come with a rate that allows banks to manage their fundamental equilibrium between assets and liabilities, funding and lending.
I presume the story won't end at the end of the year. I mean, there will be some amounts of transition risk. What do you see as transition risks?
I think everybody knows that if you allow me the expression, the game of chicken between markets and policymakers, there has been a compromise. So a number of benchmarks will be discontinued at the end of 2021, but the benchmarks that are most fundamental and most diffuse across contracts got a reprieve until 2023. And I think that was wise. And it just shows that both markets and policymakers get it. So that's very promising. On the other hand, I still have a question mark on derivatives. The success of LIBOR was we had a money market which was functioning very well and very deeply until the financial crisis. Actually, many people say that many people with short memories talk about LIBOR manipulation as the issue. Manipulation is the symptom, is not the cause. The cause was the drying up of liquidity. Now, what we are observing in terms of drying up of liquidity is happening in the derivatives market. So the markets are still trading LIBOR-based derivatives because substitutes have not come online. And this is really what I would leave for thought. We were used to an integrated cross-currency, cross-assets market with cash and derivative instruments. And we are now going to a much more siloed landscape. And to me, what needs to be done and between now and 2023 is see how we can connect these silos.
It seems like collaboration is always the answer to many questions. Federico, thank you so much for joining me today and for sharing your thoughts.
It's a great pleasure and an honor, and great to be with you today.